This is the talk of Music City Real Estate.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here, Realty One Group, Music City.
Hey, Carey Ann with CMG Financial and my mortgage team, and welcome back. It's Sunday evening.
Welcome to Sunday evening, everyone. We're so appreciative of everybody tuning in this regular time on Sundays at 5 o'clock. And thank you also for those who have been sending in questions. We appreciate that. Speaking of, please send those questions in to questions@talkmusiccity.com or hashtag TalkMusicCity.
Yes, and the show is also a podcast, so you can listen at your leisure. We're on iTunes, Stitcher, Google Music, and others. You can also watch us on YouTube or our favorite, Facebook. Simply search The Talk of Music City.
Carey Ann, it's good to see you tonight. We have a special guest, as you know.
We do.
Tonight's episode is all about appraisals, everything appraisals with Paul Stagner. Paul's been in the business forever, it sounds like. Paul, welcome to the evening.
Thank you. Great to be here.
Great to have you on. And before we go down that road, though, Carey Ann, the real estate world has been shaking and baking here lately, hasn't it? I mean, it seems like every week somebody is new, another company is in not cahoots, but in connection with another company, and it's like crazy. I know Zillow's come to town now, and I'm going to stand firm here in case anybody's wondering. I know you were wondering when you got up this morning.
I was.
Does Monte still feel the way he said he did the last time we talked about iBuyers? And these big ones coming from out of the area, I absolutely do. Just for the record, okay. And I've understood, though, there's a possibility that some of these are just really trying to get in your business, the mortgage business. Is that true?
Well, they may.
Have you heard that rumor as well?
But, it's all about getting folks a really good service experience and making sure people close, and get close to the finish line when they're expecting it, right? So right now, I think a lot of the big players can come in. Some of the larger banks are already here, right?
Right.
And so, the mortgage business is a lot of fun. I'm, blind in one eye because of it, so it's a lot of fun. But, I wish them the best.
Well, aren't you just a sport?
Well, at the end of the day, I know that they can't really do my job. At the end of the day, if a client's looking for true service and fair rates and needs somebody to hold their hand and get them to the finish line on time, they're gonna call me. They're gonna call somebody with a really solid reputation, and I'm hopeful that I've worked really hard to make sure that's there. So
there's a reason why she's number one in the state. That's the rumor on the street. There's a reason that you're number one on the state because you do such an outstanding job. And few brokers out there are more cynical than I am on the topic, because to me, when I make a recommendation of a mortgage company, especially, then all I've done is I've handed my 35-year reputation on that one transaction each time. So I'm extremely cautious whenever I recommend a mortgage.
Well, and some people want to use their friend or their sisters, brothers, aunt or uncle, et cetera. And, we had this situation just recently happen a week ago, actually. And the customer first called us, and we actually were the featured lender, preferred lender, you would say. And sometimes that's hard because they automatically think they don't want to talk to you because you're connected with the seller or something, right? However, there is the reason sometimes, because we are good at what we do and we will guarantee an on-time closing, so everybody will get paid and the experience will be enjoyable, et cetera, et cetera. So this client decided that they actually wanted to use their good friend at lending company A, right? And maybe because their interest rate was lower, and even though we matched everything, they still wanted to use their bestie, maybe from college, et cetera. So did we not get the call 5 days past the closing date to say, hey, can you just tell us how you got those condos downtown approved so they could go conventional? And so out of the kindness of my heart, at the end of the day, I just want to get it closed for this customer, right? And make sure that everybody is well taken care of. So I shared with the lender exactly what to do, right? Wow. And I gave them all the details. And I was expecting that to be approved that afternoon, because that would be what would happen in my office and close, on Friday type of thing. Well, 2 weeks now now. We're now 2 weeks out. And so got the call again, and the builder said, basically, you need to take this loan on because this lender doesn't know. So yes, your friend down the street or your mom's uncle, brother type of thing may have a lower rate, but do they know fully exactly how to get somebody to the finish line? And in this case, that builder charged her $150 a day, and it was 10 days past just for that, and didn't charge it when I took it on because I have to wait the 8 days. But
that's so wrong.
Again, it's an example of not every lender knows how to close condos. Not every lender has all the products, right? And so working with somebody, so Zillow can come in great, or Big Bank A can come in, but do they really know what they're doing? They're going to hire somebody maybe at a salary, but they're not going to get somebody that is educated as my team and I. So I welcome them.
Same with our industry, the real estate industry. You know, there's some big guns out there that are actually buying sales volume out there. I don't know. What I don't understand is how you buy culture. I don't think you can buy culture. I think culture has to be a thing that grows organically. I think the leadership has to have their act together at least to a certain level, so we're attracting the right people. If we don't attract the right people, then it's going to be built on sand.
And I do think that the local companies, which I think so many of us are, and they do an amazing job, but they're fair. You know, they're not going to have the lowest big bank low rates, right? But they're fair rates, right? It's a whole package. When I'm looking to buy something out there, I'm looking at the whole entire package. And I want to make sure that I don't lose one of the biggest investments, right? If my contract falls apart at the last minute because financing couldn't get done. And that house is what I have dreamt my family to be living in. I definitely don't want all of that responsibility on one lender just because they gave me a little bit of a lower interest rate, And usually the local lenders will probably work hard to match that. But love it. Keep it local. The more that my family and I can work, or I can work hard, I can give it back to my family, and we spend money local, right? So keep it local is keep.
That's the mantra I want to make sure everybody's sharing is that. Then that is let's keep the money local whenever we can. Everybody benefits that way.
Absolutely. But I'm excited about tonight because appraisals is something that I deal with on a regular basis. So Paul, welcome this evening.
Thank you.
Yes, and so like you said, you've been doing this business a really long time, not only appraisals, but real estate, I hear, as well.
That's right. They've both been very good to me. I've been an appraiser over 30 years, but I also sell and renovate houses every now and then, do a little bit of everything.
Well, I think that's important to dabble in it all because you actually can understand what the agents go through, right? Or the buyers, and sellers go through.
Yeah, when you're in that part of it as well, you really got, I think, a more compassionate viewpoint, certainly.
Sure.
And
the appraisal side does go hand in hand with the realtor side, and a lot of times we can speak the same language, and if there are problems, we know how to work things out. And an appraisal is an opinion, so sometimes things matter that we can talk to agents about, and things we may not know. So
Paul, you said you've been in this business for over 30 years. Any ballpark idea, just wild guess, how many appraisals have you been responsible for?
There's no way I could go back and count, but I have tried to estimate. I would say probably around 13,000 appraisals.
13,000.
Yeah.
Wow.
Yeah.
And
they're
some
all
people,
right.
That's a lot of bedroom measurements, man.
A lot.
There's a lot of comp pictures there.
Wow.
Can you imagine if there was 13,000 appraisals? How many pictures you've taken?
And back in the day,
and how many miles you've driven too, right?
Yeah, I'm hard on cars.
Holy cow.
For sure.
I mean, here in Middle Tennessee, is that where all this has happened?
Well, I started off in Kentucky. Actually, I appraised when I was in college. Then I moved to Los Angeles in 87. Moved back here in 2001. I've been here since then.
Okay.
Yeah.
So you know the area pretty well.
Pretty well.
And what's great about Paul, too, is not only can he do conventional appraisals, but he can do the government appraisals as well, which are going to be your FHA and also your VA, right?
Correct.
As you referenced?
Yes.
Which means you need extra certifications on top of just your basic licensing. Is that correct?
Yeah, I have a layman's way of putting the VA panel. VA only uses appraisers on their panel. You've arrived. You're a cranky old person when you get on that panel.
I've never met a young VA appraiser.
No, and you haven't still.
No offense.
Are you saying you're cranky, Paul? No.
I can be, no.
Okay.
No.
We'll butter you up here before we send you the order. I love it. Well, technically, we're not sending you the order anymore, and we'll talk about that. Life has changed from back in the day. We called our buddy the appraiser up, right? So now we have to use AMCs, which is a lottery. So AMC
means
Appraisal Management Company.
And so
Appraisal
there's
management
multiple
company.
of those that compete for our business out there. But at the end of the day, we like one that takes care of our appraisers, pays them on time and pays them the right price, et cetera. Then they just do a lottery. So I submit an order, and in his case, Paul's on that panel. I then get, I may get Paul, I may get Steve, I may get Sue. I don't actually know until the appraisal comes back into the listing agent actually will know more than I would. But it's really working hard to change and lessen the fraud issues that we used to have
Sure.
way back in the day.
Sure.
Yep. And then the VA, like you said, if I have a veteran, and we love taking care of our veterans,
We do.
but we order it through the VA site, like you referenced. And again, I don't know if Paul gets that until the end of the process too.
Basically, the VA is its own appraisal management company. They also have a rotation, and you can't say send it to this appraiser, even though you may know I'm on the panel, which is good. There has to be some distance because, you don't want those wink-wink relationships,
Right.
because that's gotten the industry in trouble multiple times.
Right. Absolutely. We don't want that.
So
for
how
sure.
many, on that topic of VA, there's not very many of them here in Middle Tennessee, are there?
There aren't that many. Yeah, it's
So-
kind of a restrictive list. So I'm not sure if that's a good thing or a bad thing, but there are just maybe a dozen in this.
Are there that
market
many?
here.
I didn't know there was that
Yeah,
many. Okay.
depending on how far out you go.
And that's why I think it was the rule 10 days. You have 10 full days to complete the
We have
appraisal.
7 business days, which usually will work out with a weekend, so 9 to 11 days.
Right. So, and I think the VA does a great job, because they let us know, early on in the process, and we can talk more about this in a little bit, about Tidewater and things, different terms that might be new to a lot of people. So thank you so much for joining us this evening. We have Paul, the appraiser, who's going to be talking all things appraisals. You're listening to the Talk of Music City Real Estate.
Hi, my name is Monte Mohr. I'm the broker-owner of Realty One Group Music City. I've been an active real estate broker for over 35 years now, personally selling thousands of homes. That's why I recently opened Tennessee's first Realty One Group office. As a real estate professional, would you like having it all? Cutting-edge technology, full support, world-class training, same-day commission deposits, all for free? How about strong collaborative culture, national brand recognition, new high exposure, easy access office, and a non-competing broker committed to your success 7 days a week? Now let's top that off with all experienced agents receiving 100% of their commission from day one. I know, where's the catch, right? There is no catch. Call us today and schedule a confidential meeting and learn why Realty One Group is the fastest growing real estate franchise in the nation. Call 636-8244. That's 615-636-8244. Or go to topagentsuccess.com. That's topagentsuccess.com. Super Talk 99.7 WT and the Talk of Music City Real Estate.
Where we educate and motivate all things real estate.
This is Monte Mohr with Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team.
Happy Sunday, everyone. We have a great topic tonight on real estate. We do want to remind everybody, please send those questions in, though. Questions at talkmusiccity.com or hashtag talkmusiccity. Our guest tonight is Paul Stagner with Anchor Appraisals. He's been doing Carey Ann, this man is also a real estate broker in our office, and he has been in the business, get this, longer than I have. I didn't know anybody had been in the business that long.
I should be more successful than you, but obviously I've failed.
It's not about that, brother. That's pretty incredible. I'm usually the old guy. I'm still the old guy, but I'm usually the one who's been in the business the longest in our office. But so I step aside for this man here. He's been in it a long time.
Amazing. Well, amazing. And appraisals are not easy. Some people think, you pay their $300 to $700, whatever the cost is, and it's a really easy process.
Right.
But there's a lot that goes into appraisals. You have to find, the comparables and take pictures, et cetera. And there's probably more changes now than there were way back, since you've been doing it for so many years, right?
Right. When I got into it back in the 35 millimeter film days, the MLS was in a phone book type thing. There was really computers were not as efficient as they are now. So it's come a long way. Now the only thing I have to do in the field is actually go inspect the subject property and the comparables. The subject property would be the house that we're appraising. That's kind of appraiser talk there, but
And take pictures, right?
and take photos. Yeah, everything else is click as far as the data and all. So, but yeah, it's gotten more complicated. The technology's been convenient, but it's gotten much more complicated because of the regulations that we have put on us now. And the last go round, the 2007, 2008, a lot of appraisers just quit because the feds and all, because of so much more regulation after that, subprime mortgage crisis and all that happened. A lot of people just said, it's not worth it anymore. I'll go out and I'll sell insurance. I'll sell real estate. I'll be a builder.
Do something different. Yeah, for sure. It's interesting.
Yeah, it's understandable when you look at the detail of an inspection and to find out all the hoops you guys have to jump through and be so disconnected to the team you're used to be able to work with and so forth. So let's talk about, just give us an overview of how does an appraisal work, okay? I mean, I have an idea as a real estate broker, but how from your perspective, just an overview, how does an appraisal work so the listeners can understand a little bit of the process?
Okay, well, generally, we're like a neutral party in this process. We do get paid, but we get paid either way. So we're coming in, we're sort of like an umpire in a ball game. But an appraiser is looking for an objective opinion of value. We're not trying to hit a certain number. We're not trying to ruin your day. We're not trying to make your day. What we're trying to do is provide for our client a real value of a property. 12 inches equals a foot. You do with that what you like. So an appraisal generally is just what anyone else listening would do when you're trying to find the value of something. You'd look at, well, what else is sold? What's that worth? If you're looking at a used car, something like that, you might get online and, well, what are other comparables? And that's all we do. We look for comparables. But we have to know the details about the subject property, too. So we'll go out and measure. We'll photograph it inside and out. We'll walk through the inside. We'll look at, the condition, the upgrades, the site, the view, what's next door, what's behind it. Look at the comparables, make notes of them, photograph them. Try not to get caught so the neighbor doesn't run out and say, "Hey, why are you photographing my house?"
Yeah.
I never thought about that.
You got to be sly.
So as far as preparing one, as far as a homeowner preparing one, I've always told my clients over the years that treat it like a home showing. You want to make it look as good as possible. And does that make a difference, or if the place is a mess, does it make a difference to you?
The textbook answer is it shouldn't matter, but I'll be honest with you, when I go into a home and it's a wreck and it's a mess and it smells bad, that just tells me this home is not being maintained. If I go in a second home where things are clean, things are orderly, right, things are being maintained, because we have to choose comparable sales. Mm-hmm. And if I'm looking at 10 comparable sales and I'm going to pick out 4 or 5, the really sharp house, I'll pick out the 4 or 5 higher ones. Mm-hmm. The pig pen of a house, I'll pull out the lower ones, because I think that's what a buyer would do.
Right.
If they walk into that house, they would say, it's not worth what the nice one is.
Right.
So yes, clean your house,
interesting.
Maintain your house. Yeah, because we're human beings, and we may say, "Oof, I'm glad I'm out now. My clothes smell like what was inside that house. So going to the cleaners."
So talking about the comparables, and for those folks that are listening that aren't familiar, so do you have to look for those within a certain area, a mile, 2 miles, 5 miles, and then there's a certain age? So like they've had to sell within the last 6 months, within a year, 5 years. What's the rule there?
Okay, as far as first of all, the distance, there are some guidelines. There are no rules per se. But if I'm in a subdivision with 200 homes, there's no excuse for going outside that subdivision for comparables. If there are resales, if it's a new home construction, then I may have to. But there's no good excuse to go far away just to cherry pick a higher sale, which is a lot of times what people would prefer that I do is, but if you go across this major highway and go in that neighborhood, they're $20,000 higher, and here's what we really would like to get, and it's not happening in our neighborhood. So I have to prove, because remember, I don't just turn in an appraisal and then I'm finished. I've got underwriters looking at my work,
right, and
those people know what they're looking at.
And the computers, actually, the lender's computer systems now, we actually input the data, and there's numbers that come out, and so it actually ranks what everything's looking at. So,
in fact, appraisal reports the last change in the format of appraisals. They're really written for machines now. They're not written for, if you're a savvy person in the mortgage industry, you can read, what C3 means, what Q3 means, and things like that. But they're written so they can be examined electronically. But distance-wise, a suburban, typically we try to stay within a mile. If you're in downtown Nashville in one of the big condo developments and you go a mile away, you're in a completely different market. If you're way out in some of these rural areas, you may have to go 5, 10, 12, 15 miles to find comparable properties. Because remember, it's not just what are the closest properties, but what are comparable. And this is really just common sense made complex. It's what would a buyer do? Would a buyer go look at a horse property with 8 acres and then go next door on a half acre and say these are comparable? No, he'd go to another horse property. So that's really what we're trying to do, is find similar properties.
Yeah, that makes sense.
So if you see, first of all, on that topic, Carey Ann, is it very often that you see an underwriter kick out an appraisal?
Yeah, sometimes I don't see it as much now, but there could be times where we would request a field review on top of it, if they're questioning it. So there are some times, where, like he was referencing, they're ranked, C3, C4, C5, C5. Is their house really standing there, Paul?
Right.
There's concern, major concern. For us, we get the contract. We don't know what the quality of the home is, right? Until we get the appraisal.
Eyes and ears right here.
Literally, there was one appraisal that came over, and I swear it was a movie scene of a horror film. I swear that was blood. I swear, what was happening in this house, And so we were concerned. We're like, do we call the police? What's happening here? Clearly that came in as a C5, which was not of a good quality of a home. But yeah, there's a lot that the lenders look into now to make sure that you are using the proper comparables. And like he's referencing, the underwriter will catch if you're trying to push. You have to explain. So they're going to look for your comments, or the appraiser's comments. Did he justify or did she justify with the reason that she or he used comp this or comp A or B type of thing.
And for the benefit of appraisers out there, go ahead and clean the blood up before we come out. Let's just get that straight.
Oh my gosh, it could have been ketchup, but it looked bad. It looked bad. It was an interesting deal, But one question, and we can talk about this. I'm not sure how much time we have left here in this segment, but one question I get a lot of, the agents call me and say, well, in that market, these houses are going for $125 a square foot or $156 a square foot. So clearly my house should appraise for blank, and I don't want to be the one because I want them to love me, but I don't want to be the one to say, well, that's not how this works. It's not formula 2 + 2 is 4, right? That's not how this works. So, love to talk more about that, Paul, when we come back on the next
topic right there.
on the next segment here. Because I get this asked a lot, and or the buyers that are refinancing too, right? They're assuming their house should automatically be coming in at a certain value. So come back and join us. Thank you so much for listening. The Talk of Music City Real Estate.
Are you someone who is looking to gain wealth through real estate? My name is Carey Ann Cyr, and I'm with CMG Financial and my mortgage team. Whether you're looking to purchase your first home, a second home, or even an investment property, my team and I, we specialize in making the process of home ownership smooth as possible. With our vast variety of mortgage programs, our competitive interest rates, and our local support center, we have the ability to serve so many deserving families and help find just the right mortgage program to fit within your short and long-term financial goals. Mortgage loans is what we know, and approving them is what we do. We'd be honored to help you begin the process today. Check us out at yourtnlendingsolution.com. That's yourtnlendingsolution.com. Or give us a call, always a friendly voice, 615-456-4456. That's 456-4456. We look forward to helping you and beginning your mortgage application today.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here with Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team.
Carey Ann, I got to give a shout out to the most passionately referred real estate company in Middle Tennessee, or at least one of the most.
Who
I shouldn't say the most.
Who is it?
I shouldn't maybe always say the most, but it's certainly one of the most passionately referred real estate companies in Middle Tennessee. And that is Realty One Group Music City. I'm so proud of my family. So proud of Paul being part of the family. Just some great people. So grateful. Anyway, we're talking about an awesome topic today about appraisals, and we found out that it does make a difference if you make the bet or not. You know, I'm okay. My wife told me make the bet, and I made the bet, and we were not even selling. So it's a good habit to get into, I guess.
Yeah.
Right?
They say what a habit is created after so many days.
That's right.
Make the bed.
Plus, your wife told you to. So.
Plus, my wife told me to, and it's better just to go ahead and be a good husband.
So, Paul, we were talking, the question I get often, or the formula that so many want to use is, this house or the area is going for so much a square foot, so my house should appraise, for this amount. And so how do you explain that?
Okay.
Is 2 + 2 really 4 there, Paul? How does it work?
It would work if every piece of real estate in the United States were identical.
You mean they're not?
Unfortunately, there are no two identical properties anywhere in the world. So when I hear price per square foot from a homeowner or sometimes even from agents, it's sort of like you go in and you go to your doctor and you say, but I looked on WebMD and I think I figured out what's wrong with me. You just sort of swallow hard, bite your tongue, roll your eyes, and go on. There are a lot more things that make value more than square footage. For example, condition, room count, garage, quality, age, location, pool, fence. Do you have a kitchen that's granite and stainless, or do you have a kitchen that's laminate and vinyl? Do you have an updated bads, or do you have the 1986 bads? Do you have a new roof? Do you have new heating and air? All those things don't show up in square footage.
Right. I hear bronze is coming back. I mean, is it bronze?
The oil rub bronze?
Yeah, I'm just joking. If you wait long enough, it comes back in style, right? So then it's
you haven't seen anything until you've seen the avocado and the copper color back in my day.
Oh, really?
The Brady Bunch colors.
Yeah.
I love that. Well, you're right. I mean, that's one thing that is so hard to explain to somebody, when they've already done the calculation in their head, and the agent who's preparing the list price of the home, sometimes when I ask them to pull the comparables, it's a struggle sometimes. I don't know if they actually know truly what is a true comparable for that particular house. Sometimes they do.
Unfortunately, sometimes they say, hey, Mr. Seller, what do you want for the house? And that's the number that's written.
Right. And that's the hardest part, So you referenced a pool. So does a pool actually have an effect to the value of the home?
It does, and it depends on the market. In Middle Tennessee, you've got a shorter window of months that you can use a pool. I tell people if you want to build a pool on your property, it's sort of like going and buying a boat. Do it because you enjoy it, not because you're investing in it.
Sure, you're not going to get dollar for dollar per se.
Correct, and that's called functional obsolescence. It's something even new is worth less than what you paid for it. But if you want a pool, get a pool. Now, I have had people say, I know a pool makes it worth less. It doesn't do that. Right. So let's say you've got a $200,000 home and maybe one next door is $210,000 with a pool. But they might have spent $25,000, $30,000, $40,000 on that pool. Mm-hmm. So it has some value. It just doesn't have 100%.
Mm-hmm.
Is there a ballpark you would say? Is it worth 25 cents on the dollar? Or it just really depends on the price point of the house, the neighborhood, what's customary around there, and that kind of stuff? What kind of pool it is, above ground, below ground?
The nerdy appraiser answer is find a matched pair, which is find one sale with a pool, one sale without. Make adjustments everywhere else you can make adjustments, and then what's the difference? What are you left with? Sort of the residual of what that pool is. And all pools aren't the same. Above ground pools we typically don't even count because you can drain those and throw them in the back of your pickup and they're gone. But we're talking about in-ground pools. Even those aren't all created equally.
Right. Yeah, the quality from those. So what about the neighborhood that offers a community pool, and then I decide to have the extra pool, but it's not a requirement, for every house to have it. That would adjust, maybe?
That would have some value, but probably even less value than if you didn't have the community pool. And I can see why someone would want to do that. They don't want to swim with all the kids, and you know what all that means. But you've got your own backyard pool and your own privacy, so it's worth that to somebody. But it's their lifestyle. It's not an investment.
Right. So then on the luxury side, so let's say that there's no community pool and these are now $1 million homes on the other side. My home has a beautiful pool, but my neighbor chooses not to have that pool. There is going to be a value difference there because,
absolutely.
you're wanting those luxury homes to have that whole backyard feel, right? There's an expectation level there.
Sure. And that's going to be a different market than the $250,000 homes,
Right.
let's say. And but some other markets, like if you're in Phoenix or Palm Springs or somewhere like that, and you don't have a pool,
Sure, right.
you almost can't sell your house
So
because it's so hot.
Does having an HOA or not having an HOA make any difference?
It does. But as an appraiser, we're going to try and choose HOA comparables.
Gotcha.
Because they're not different markets, but it's hard to quantify. Well, what's it worth to have a homeowners association and the pool and the tennis court, the clubhouse, and all that versus living on quarter acre just outside there.
So going back to the idea of square footage, we know that's not accurate, but is there a ballpark if you've got a house, let's say a 3-story home, and you've got counting the finished basement, and people are trying to count all the square footage. There is a difference. If you have what's normal square footage, you'd have something less than that below. Or does that matter on grade? Does it matter on finish? Does it matter on if there's a bathroom? What are the variables there?
Okay, well, as far as what's called gross living area, there are two different definitions. One, above grade is going to be anything that's above ground level. So your typical home, your main level, maybe the second floor, that's all going to be gross living area. On an appraisal report, you'll see in two different places, you'll see basement or finished basement. That's below grade, and that's if any of the 4 walls are below grade. So sometimes you've got, you walk in the front door.
Is that partially? I mean, what's the definition
any of
there?
the 4 walls.
Any
the
of
back
it
can
at
be
all?
a complete walk out onto a patio in the back. But if the front of that same level is below grade, it's by
We talking totally below grade or just even halfway?
part of it. Even if it's a foot below grade, it's considered basement.
Okay.
In our little world.
Interesting.
So you get value, just don't get the full.
Right. And again, I'm going to find homes that have that same. You see a lot of markets in Middle Tennessee that'll have what's called a split foyer home, and that lower level. For those listening, if you walk in the front door, you're faced with 2 sets of stairs. One goes up, one goes down. That lower level, chances are some of it's going to be below grade, so that's technically
Treated like a basement. Yeah,
Yes.
I learned that a long time ago the hard way.
Yeah.
I thought I was getting this great value in the first home I bought here in Nashville, and I didn't mind about going up and down all the time. And then I found out that the lower levels looks kind of like a basement.
Mm-hmm. And lower level is going to have, typically, it's going to have a lower value.
So are we talking 50 cents on the dollar, 60%, 60? I'm trying to help people have an idea,
It
ballpark.
depends on the market, but in a lot of markets, you could sort of say it's probably worth half down below.
Oh, wow, half.
Yeah. Yeah. Think about it, though. What's in your basement? Usually it's wide open spaces. It might be a bedroom, maybe a bath and everything. What's above grade? You've got the expensive. You've got the kitchen.
Right.
The kitchen's where you're going to spend the most
The basement
money.
was already there. It's not like adding on space.
Right. You've got a foundation of some sort, so to sort of grow that foundation and just finish it off. But typically it's not going to have the money spent to build it because a kitchen, master bath, living room, you've got windows above grade where you may not in the basement. So you've just got more money spent, and people will pay more for above grade square footage than below grade.
So, Paul, for the listeners that are thinking about doing an improvement to the house for investment's sake, is it best to kind of throw away investment thought and just think personal enjoyment, or are there some parts of the house that are better investments to update than others?
Well, I've always tried to enjoy the homes I've lived in, but I've always also in the back of my head thought, well, what about resale? What about when I'm ready to move on to a different home? Do I want to do something so funky that I can't sell this house? So there are places where it's always a good idea to spend your money. On the outside, I would say landscaping. Don't go overboard. But if you've just got bare bones or a little builder spec package, they'll put 4 or 6 plants across the front and almost nothing.
Right.
You're better off putting some trees, putting some, more expensive looking landscaping. On the inside, kitchens and baths are where you want to spend the money. And I do rehab homes as well sometimes also. Where I'm going to spend the money are the kitchen and the baths, because I know when Mr. and Mrs. homeowner walk in that front door, or Mr. and Mrs. home buyer, they're going to the kitchen, they're going to the bath because that's where she wants to look. And that's where the money is. Everything else, of course, always keep your home maintained, good flooring, paint, keep everything running well. An old roof, go on and replace it. If it looks old when you pull up, it's time to change it.
Mm-hmm.
Your home will sell. I mean, you're going to have to discount that home with an old roof to sell it.
So let's say you have a house in the mid-twos, right, in the area, and I want to upgrade it. You know, I've owned the home for the last 15 years, let's just say, you know, and putting granite or changing, like you referenced, that kitchen. But if it's not customary that all my other neighbors have granite, you know, is it too fancy for an area? Could that actually hurt me?
You know, it would really have to be a lower end area to say don't put granite in it, because the price of granite has come down quite a bit.
And I'm using granite because that used to be the big thing back in the day. But there could be, it's quartz now, or, you know,
higher,
right.
Right, some of that stuff.
The higher graded, you know, item.
If you're doing it strictly as an investment and you're looking at the comparables in that neighborhood and you're trying to, as a seller, you're trying to hit that higher number, you're going to have to bring the higher quality stuff. And it's a value judgment on what neighborhood you're in. Some neighborhoods, if you don't have granite or quartz, you won't be able to sell it.
Really? This is good information.
Really
you know,
is.
I would love to talk more about, you know, the idea of how we can get those values up over that threshold that some of us are, you know, wanting to see. You know, can I use a true listing right now as one of my comparables? That's always a great question I get. So tune back in here. We're going to take a short break. You've been listening to the talk of Music City Real Estate.
Super Talk 99.7 WTN, the talk of Music City Real Estate.
Where we educate and motivate all things real estate.
Monte Mohr here with Realty One Group Music City.
Hey, and Carey Ann with CMG Financial and my mortgage team.
We're back, and it's talking about a great topic that in the real estate world is so crucial to us. You know, I'm always getting phone calls from experienced appraisers like yourself, Paul, because I believe that a good appraiser, when they see something out of the ordinary, a lot of times they will reach out to that agent and find out what the details are. Was there a distressed sale or something like that? And sometimes they always act a little surprised that I'm so quick to call back. And I said, look, next to my wife, you're the most important person in my life, because the appraisers are that important, I think. And that's, of course, next to Carey Ann and my wife, of course. You know? but anyways, I want to encourage all agents out there that are listening, when you do get a call from an appraiser, be sure and return that call, because they're just trying to do a great job, you know, for the client of yours or someone else's client. So sow that good seed, right?
Absolutely. And I guess the question is, you know, do you need an appraisal? Is it required, you know? And, you know, for the world of lending, we need to make sure that house is of value, you know, of the price that we're only going to lend what it's worth, right? So that's important. But, you know, there is a whole process that we have to go through, you know, and there is a cost of that appraisal. Your time is worth money as well, right? And so you'll find sometimes that the lender is requiring you to pay an upfront fee to make sure that the time and the work on it is covered, because even if it doesn't appraise, somebody still has to pay for that, you know, appraisal.
And sometimes they don't want to pay for it if it didn't come through.
Right. So it's a hard little piece that we work through, you know. So let's talk a little bit more about the question I get often asked. You know, I've got, you know, listings all around. People are multi-offers, right? They're outbidding, so the values are jumping, or what we think they're jumping, you know, because that individual really wants that house, so they're paying maybe more for that house. You know, can I use an active listing as one of my comparables, or is it only, you know, solid sales? How does that work?
You can include listings certainly on an appraisal, but they are not closed sales. So the industry, when I say the lending industry, does not want to base anything on asking price, because, you know, it has to be a transaction that has gone through this process, that's been vetted, because you could see someone that, you know, there's a fervor to buy this because some unusual reason, there was a competitive bid, but no one can support that sale price with other market data. I see this a lot, and this is a plug for Monte and other realtors. I see more for sale by owners fall apart.
You do?
For
Wow.
this reason.
Yeah.
Just because there are no experienced people in the process, it's maybe someone says, honey, let's sell the house, and the people across the road, my brother-in-law is looking for a place. They want to move to Nashville. They love this place. They're going to pay you what you ask, and then now what do we do? I don't know. Well, who orders the home inspection? Do we need one? Right. Are you pre-approved? There's just so many unanswered questions, but something that no one ever thought to do is, well, what's the property worth? Well, here's what we want, because we want to clear $100,000 and move to Florida.
Like that has something to do with it.
Yeah, that doesn't matter value-wise. So there needs to be market support for whatever it is, and that's really what we're there for, is just a market check. And in appreciating markets like we've had here in Nashville for a lot of years now,
Right.
It seems like it's like we're always on that cutting edge. And when someone has a deal that maybe it's the largest one in the neighborhood or something like that, it's really challenging to find a sale that'll support that. Not that we're trying to rubber stamp a number, but what we're trying to say is either it is worth what, this price, or if it's not, here's what it is worth.
Mm-hmm.
And sometimes we can look in other neighborhoods. That's a case where if something's a little larger, maybe it's nicer, maybe it's been upgraded. If you go in some neighborhoods that are maybe 15, 20 years old, they're kind of getting to where they're a little bit dated,
Sure.
And some people are just sort of hanging on to their 20-year-old fixtures and roof and heating and air and everything. And some people have gone through and spent the money. Well, that home's worth a lot more.
Right. Because
But
of
if you
those
can't
upgrades.
prove it in that neighborhood, you have to go somewhere else to find sales that will, will support that home.
Carey Ann, I want to take a quick sharp left here just for a second, okay? I know that I never do something like that.
You never
right?
do that.
One of the reasons why I wanted this man on here today is because of another talent or another ability that he has. And I don't know if you've been paying attention or not, but I'm really down on the iBuyer. Have you noticed that?
No.
I am really opposed to these companies, these nasty companies coming in from out of state, Seattle and San Francisco and so forth, and discounting values and so forth. But here's another reality, though, that was probably in the last month my eyes opened to, and that is there are cases where it makes sense to discount your home and just get rid of it. There are those cases,
Sure.
okay? So one of the reasons why I like Paul, other than he's just a super guy and he knows what he's talking about on appraisals, but he also has on a business where he will buy property on a wholesale basis.
Okay.
Okay, so we can keep that money locally. That's what I love about that.
Oh, that's amazing.
In those, we shared with our agents just recently at your training room that look, there are those occasions. You've only heard me talk bad about the wholesaler, but there are occasions where there's an emergency going on in life, and people just need to get out of Dodge
Right.
for whatever reason, and they've got enough equity, even at a lower price, that they can do it, or maybe they just want to walk away from it.
Sure.
Okay. And so we can take care of that need here with Paul. And I wanted to, make sure that the listeners know we have a resource here. If you do decide, or somebody thinking about, or they're in a situation they got to get rid of the house, then Paul will give he'll pay that wholesale price, basically what these other companies you heard me talk down about.
Right.
Okay, but we're keeping the money locally. And again, I think that's the theme that I want to continue to remind folks of. Let's keep the finances local, because it's going to help everybody here. In a long-term way.
Thank you.
Well, that's amazing. Have you been doing that often?
I've been doing it for a few years, and the ideal situation, I'll just say, I'm not competing with the iBuyers to come in. Let's say you've got a home that is ready to list with an agent, and it's competing with these iBuyers. That's really not what I'm going for, because why not list it with an agent? You'll
Right.
make more money there, and
Right.
I wouldn't tell you, no, do something else and make less money on your home. But I have a couple, one on contract now, in fact, that there are two heirs living out of state. It's their deceased mother's house. Neither of them ever lived there. There really is no family emotional connection to the house. It needs a lot of work. I mean, a lot. Mm-hmm. And they don't want to come here, hire contractors, put up the money, live here while the thing's being renovated, and then all that. It's sort of like you've got that car, the check engine light's on, the windshield's cracked, it's got bald tires, it makes a funny knock when you start the engine. You just want to hand it to the dealer and say, here are the keys.
Right.
How much will
Make
you give
this
me
go
for this
away.
as
Yeah.
it is?
Yeah.
And so that's a good niche for me.
Right,
I
and
have
that's one of the reasons I love this guy, because he's doing this, but in a compassionate way to fill a need.
Yeah.
Rather
love
than
that.
come in and strip mine an area like
Yeah.
some of these other companies. Okay,
That's amazing.
Anyway, I know that was a left turn, but Got to keep hang on to the steering wheel when you're riding with me.
And I'll gladly
Hang on tight.
I'll
Hang on
gladly
tight.
spend that money here.
There you go. Hey, just to remind our listeners too, so if a value of your home does come in a little lower, but you are willing and wanting to pay for it, that particular price, you can still pay that price. A seller may still want that particular price. So the lender will work with you on that, usually pay the difference and a percentage off, and your down payment's a little bit different. So we just want to make sure that everybody knows out there that they can still get financing even if the house does not appraise for the total amount.
A lot of people don't know that, Carey Ann. Thank you for sharing that.
Yeah.
Say that one more time, but just make sure people caught that, okay? Because that's really, really important.
Yeah, so just to make sure everybody knows that if the house did come under value, let's say $5,000, but you still want that house, you can, and you still agree upon that house, you can bring the $5,000 to the closing table to make up the difference, and then you can also bring your percentage of down payment as well. So
you can actually not change your money out of pocket by just adjusting the rate a little
depending
bit.
upon what your current LTV or loan to value is currently. So the folks that are putting a larger sum of money down, usually it doesn't shift their bottom line at all. It's just a change in the loan to value there. So, but appraisals are needed again, like Paul referenced at the beginning. It is just an opinion of one, and so you do find sometimes that Paul can appraise it for this, and he does an amazing job, very thorough. And then someone down the street can appraise for a different price, and we see that sometimes as well because they're using different comparables or not going the extra step and the extra mile.
Paul, great having you here tonight. Thank you so much.
Thank you so much.
Appreciate you.
Thank you both.
And we will see you next week on the Talk of Music City Real Estate.